Investors attempting to gain an edge in the market continue to eye the housing sector, which remains in volatile territory despite gains in stock market and labor markets. I have Axel Merk of Merk Investments to try and read the tea leaves. Axel, thanks for being here.
Oh, tea leaves is a great way of expressing it because that's all we have, backward-looking indicators, because the Fed is manipulating everything looking forward.
Well, that has been the discussion, right, is what the Fed's asset purchases and the discussion of raising rates. We're actually seeing mortgage rates come off the highs that we'd seen last year. So what are investors supposed to expect looking at these volatile housing numbers?
Well, they're very sensitive to interest rates as they were ticking up just a tad. As of the last 12 months, the home sales have been on the decline, more or less so, and now the starts are up. But ultimately, everything is based on an asset price inflation, and that's very vulnerable because it's not sustainable. One day the glass is half empty and all the quote-unquote good the Fed has been doing is going to be undone.
Sure. No, we had starts come out last week. We're looking ahead. Existing home sales are expected to come out to 4.7 million, new home sales at 420,000, which would be increases from the prior reports. But the average person who's looking around at the housing sector isn't taking a look at each one of these probably. So when you look at existing and new home sales, what kind of numbers do you think we need to expect to really have some confidence in this market?
Well, in the short term, everything is still a bit gobbled up with the weather we had. We have a big backlog, and so everybody will be enthusiastic when the things look a little better. But ultimately, the consumer is interest rate sensitive, is maxed out. The volume of homes sold is not doing well. And so I don't think the Fed is going to have an easy course continuing its exit, but it will do so, and I think it's going to have a rude awakening later this year.
Okay, so the final takeaway right now, people should just sit pat and
be careful because an asset price inflation is not sustainable on the equity prices in particular, and the housing market, of course, it takes a little while for things to adjust.
All right, Axel, as always, thanks so much.
My pleasure.
Thanks again to my guest, Axel Merk of Merk Investments for TheStreet in New York. I'm Deaux.